Welcome to Trading Lounge and the Australian report for the 6th of October. This particular market we're looking at here is the XJR, which is the resource sector. But what I want to point out here is it's a bit the same as the XMJ and the XMM. They're all pretty similar in the sense that we're looking at a five-wave move of 1 and 2, well, 2 to here, and 3 and 4 and 5 here. But what interests me the most at this particular point in time, I can see that all of this here is basically the A wave here, the B wave here, and the C wave here is finished now. It probably doesn't make a lot of sense, but 1 and 2 and 3 here, little triangle for 4 and down for 5 here. So I think that we're finished. I think that this correction is finished now. So that means that if we go to the XMM, it's the same thing here again as well. We've got our 5 waves up here, and then we've got 1 and 2 and 3 and 4 and 5 here, ABC here. Then we've got 1 and 2 and 3 and 4 and coming down for 5 here. So I think that we're finished here as well for this. And the XMJ, which is this one here, the materials sector, down for the ABC here, then 1 and 2, nice strong third wave in here, fourth wave and fifth wave here. So I think that we're ending our correction here. Now, you know, for the XJO, you know, it's been a bit weird because it's been pulled around by markets, you know. So if I can just remove this here, bring this down here. So this high here has always been important as such in terms of you know, when we look at the resources, we can look at this as the fifth wave up here, and we know that this little high here is the high here, but yeah, when we look at other markets, just to give you a bit of an idea, sectors rather, the property market's quite a good example. The XPJ here, where we've got up for 1 here, back for 2 here, then 1 and 2 and 3 and 4, 5 for the third wave, and we've got the fourth wave pulling back here, and then we've got this move that's still moving, you know, that's still moving up high here. So the property market has moved up, while the banking sector from this point really has well, I'll say the banking sector because the banking sector has pulled down the XJO, pulling back down this way here so much. But I think it's finished. So when we have a look at the XXJ, this is the XXJ here, which is the banking sector. We can see 3 waves up here for this, of course. And as you know, I was looking at this being the low down here, but one of the problems was I didn't really get 5 waves up here for this. You know, I didn't get it in CommBank, I didn't get it in ANZ. It's possibly that we could still count it in a bullish way, but what I'm sort of thinking about here is, well, one thing is for sure here, we're at 5,000 here, so we've got support here for this. So I think that it's possible that the markets just can pop up, you know, a little bit further up here and then fade from this point here. But with the banking sector here, we can see that this line across here, the 5,200 here, you know, if that was pierced, if that moved up through here, because the only way that this leg here, it could be down that we have all of a third wave down here, and this is the fourth wave, and we move down further. But if we get support on 5,200, right, then this becomes the floor here at this point, and that means that we'd be moving up from that point. So I think that we're, you know, even though I haven't got my 5 waves in this structure here, and even in the XJO, the 5 waves up here, let's just find that again. The XJ. Yeah, so on the XJO here, I can count 3 waves down here, but this move here is a little bit tricky to see, but you know, we could count 5 waves in this move here. So maybe this is wave 1 here, and then back for 2 here, nice pullbacks, you know, 61.8%, and then the 3rd wave up here, the 4th wave, and then the 5th wave up here, and then we've got our ABC pattern here. So and all of this would count a little bit differently here. So from the 3rd wave over here, I would be thinking that this would be the A wave, because it was in 5 waves here and it never really got resolved. So an A wave here, a B wave over here, and a C wave down through here, and then up for 1 and back for 2. So I think that we may be heading off now. And the thing is that this can be for both sides of the market, which is banking, well, finance and resources. So I think that we're at a critical sort of point here. I mean, in the US markets, we've been having difficulty in looking at the wave 4 back here. Let's just bring up the S&P 500 for a moment. I just want to, I'll just come out a little bit here for this. So with the S&P 500, I've had this as the A, the B and the C for wave 4 here, and I've been quite happy with that, but I've had to build a case over this side of impulse waves, and we've been doing that, and you know, and it's looking quite good, you know. So it's looking quite sort of positive. One of the things that I've mentioned this morning was Amazon, really. So we've got the ABC down here for Amazon, and then we've got this as possibly 1 or A or 2 or B or 3 or C here. But once that high here gets taken out, because that's 5 waves in here, once that high here gets taken out, then that's going to make all of this pattern here bullish. So this would be one of the first patterns that, I mean, there's others, of course, but this is such a big stock, so it's important that, you know, because if it's just 3 waves here, then it can fail and move down from that point. But if it takes that top out here, then it's going to be, we can look at all of this as more of a bullish case here. We've built our, you know, we're stuck with our ABC for wave 4 here. We know that this move up here can be the B wave, so we need to prove that wrong by taking that top out there, and then we know we've got a bullish market at that point. Then this can continue to move up higher from that point. So if this is going to move up, then you know, then the S&P is going to, the NASDAQ is going to move up, and so on. Well, then we could also lift as well. So CB8 here, lifting off this. So even though I don't have a nice impulse wave up into this move up through here, I still think we should start to think about going long here now. So we can just put that on top here, and we'll just keep the stop underneath. But we'll do the robo method, so the daily robo method here. So find the high here for this, and then put your order to buy on stop 1 point above yesterday's high, and let's just see how we go with that. Now, probably a good idea not to overtrade, because we don't have 5 waves here, and all of this could just be corrective in this case as well. We could just come up to this point and then fold back. So I think having half a trade in here to lessen the risk would be the right thing to do. And we'll just keep the stop out the way for the time being. We'll just leave it down here. And then we'll look to build on this trade. We can do the same for ANZ as well. Let's just find ANZ. Not that you have to be in both of them. See, with ANZ, had a nice impulse wave here yesterday. We still don't have 5 waves up here, but we could look at this as 1 and 2 here, and then up for 1 and back for 2 here. So there's a couple of ways that this could all play out. Or you can just wait for the 18 to become the tested support, which is good. So we are lifting, and I think we need to acknowledge that. Yes, these can be corrective patterns, but I do think we should edge our way into these markets. As also, I was looking at BHP as well, the New York BHP, because it just had a tighter correction. So I can look at this as I've done before as that needs to go over here one spot, as well, all of the A wave here, the B wave here, and it's a bit hard to see here, but as 1 and 2 here, gap in the third wave, fourth wave across here, and the fifth wave touching down here. I think this is finished now too. I think that this can just move up from this point. Yes, there is a problem that we need to resolve along the way for this, and that would be that this move here, take this, so this, once we're past here, we're pretty much, there will only be one more small thing. So this one, and also too, we may as well include from that high, we also may as well include this one as well. So what we're going to do here, just so we know that, just so we know this. So there's two, all of these here is possibly where this market could move up, fail, and then move down again here. So all of this would be down for 1, back for 2, and then down for 3 at that point. So if you're going to go long here, then we'd want to go long like now, because that way we'd be close to the low here. So we can do a robo method here, and you can do this on local BHP as well. I'll just put it at half a move here, and we'll keep the stop off the level here for the time being. Just give us some breathing space here for this. So with the local BHP, I can count 5 waves down here, 1 and 2 and 3 and 4 and 5 here, right? So the local BHP, where have I put that? Give me a second. Oh, here we go. Oops, no, that's the New York one. So this is this one here, and I can count. Well, yeah, it's a little bit tricky. It's just a bit of a trickier one to count, this one here. I can see 5 waves from that high here down to that low here. I can see 5 waves in that, and you'll be able to see them too, with 1 and 2 here, and 3 and 4 and 5 here for this. So it does leave this one here still exposed. So the problem with this is that it could go up to this point here and fail from there and have another low in here for this. That's the risk at that point. Let me just have a look on the tick chart here, just see if it's any difference. Oh no, that's okay. Yeah, right. I think we're done, because we can count this here as 1 and 2 and 3 and 4 and 5 here for wave 1, back for wave 2, and then 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave and fifth wave here. So we could go long here for this market. So we can do that. Let's just, we'll just go long above this little high here. I mean, it's much higher risk being in on the low, getting in on the low. But what we'll do is we'll just go half position. It's just nice to have a little bit of, just go put it 1 cent above that previous high, and we'll go long at that point, and we'll just put the stop here under the level. And let's just see how we go. And we'll look to build in on this. So we'll just put that there as the stop. I mean, as I mentioned before, technically going long above the B wave here would be the right thing to do. But it would be nice to get, if this moves up here further, where's that 61.8% here for this? That's up here, so we have to really wait for that. I don't like going long just in front of in front of 38 here. That's a real problem. I mean, when we talk about the 61.8%, you know, it could be it can be higher than that, you know. But then I don't, you know, we could go long above this one, but I don't want to. I don't want to be long in front of number 8 there because it's going to pull back. So I think we'll just leave it like that, and we'll accommodate that. I mean, if you wanted to as well, if this other count here, no, that's not going to be right now, is it? Because I've checked that out on the other one. So we should be good to go. So that's what we'll do. We'll go long here, put a stop under here. We know that this is the problem area. And then, well, 38's the real problem area, number 8. We can also get group 2 out of here, which will be 36.50. 37.20 and 38 there, that's all of group 2, but we'll just work with these two numbers here for the time being, the 5 and the 8. And look, once the market is up into this space up here, then I know that it's going to be going higher from that point. So we could get a position there, but we'll leave it for the time being. Let's just take a look at what we get here first. I'll just save that. And we'll do the same with Commonwealth Bank. You can do the same with ANZ if you want that. We'll just do one of them. Yeah, okay, because I think they're both going to be moving together. Okay, back to this point. Now, the ASX here, we've had it as wave 3 here with wave 4 down through here. It's possible that wave 3 could be sitting in another place. So let's just check this out here. It's possible, like I've got it here as wave 3 here, an A and a B and a C. I think that's kind of right, actually. But anyway, it will reveal itself in due course. So as I've pretty much always mentioned here, that we need the 6,000 as the support, and now that it's traded below here and tested below, like it's testing the demand here, and if it's, I feel like it's here because I can see it in the material sector and the banking sector, so I can see that there's support here, but all of these markets that we're looking at don't really have nice impulse waves to the upside. But we are seeing the US fall into place and moving higher. So even though we don't have the perfect setup and the perfect structures here, I think there's enough evidence for us to move in and to go long. We should already be triggered in on this here. So but being on 6,000, that's the takeaway. That's really what we want there. So, but yesterday we looked at the move down through here and we looked at the 61.8%. I know it was a bit late and lagging and all the rest of it, but we're above that now, and you may have a long trade in there, and that's all good. So yeah, when you look at this on the daily chart here, I mean, when I look at it like here, I can see that it can be an A wave, a B wave, and a C wave to the 6,000 here. So I'm going to leave that here on this chart here because it's valid, you know. So that means that all of this can be the A wave here, a B wave here, and a C wave here. I know that's not very bullish, but if we go to maybe the 1 hour or the 15-minute chart here, so with the 1 hour chart here, as wave 4 here, then we can look at this as wave 1. I know it's not really good. This is okay as a wave 2 for a wave 2 here, ABC for wave 2, and now we're seeing an impulse wave here. Now I know that we can just move up into this space here and fail from that point, right? I understand that, but I think that we're looking at something like this here, and you know, when we get support, or if we get support on the 6,000, well, that's really going to help us in that choosing the direction of being bullish at that point. So let's just go to the 15-minute chart here. So in counting this to the upside here, well, first of all, we've got our A, B, and C down here. We can have that as wave 2, so I'll just copy that here for wave 2. Put that in blue. And I think that we're looking at an impulse wave to the upside in this case. So 1 and 2 and 1 and 2 and 3 and 4 and 5 the third wave, fourth wave and fifth wave. So in a way, we're going to get the classic trading levels pattern across this level here. So we'll get the arrival, the reaction, the first high above the level, and then hopefully some sort of ABC pattern here. And that's where we're going to look to add to our positions over here. I hope that makes a bit of sense. Now, because of the B wave here, this can be the top of a B wave and we could just fail from here. If you're long already, it's a good idea to take half the money off the table at this point here and then wait, and then we can rebuild back in over here for this. So, I guess in the safe trade in the bigger picture is seeing the 6,000 with this classic trading levels pattern here. So this is what we're looking for. If this is the 6,000 here, we're looking for the arrival, the reaction, the first high above the level, this particular pattern here, and then getting support over here. We need to be mindful of the variation pattern here. So the first high where it doesn't drop below the level here on this one. So this high here, that becomes critical. That's our entry point, and we may be able to get a better entry point at this point. But if this happens, we still need to be triggered in long here and long here. We need to build in 2 or 3 positions in the beginning of this trend here for this if we get the support on 6,000. So we either get this one or we get this one. Okay, so pretty simple. So a little bit of patience and not over trading will keep it pretty comfortable at this point. We don't need to really worry about anything here. I mean, if this is a top here, it could drop back to here before pushing up into that space there as well. A little 5-wave structure in here can finish that off. Yeah, so look, I'll just leave it at that, I think. So just going back to the 4-hour chart to recap here. Now, it's possible that all of this down here is an A and a B and a C, and we finish at the 6,000 and we drop from that point. The other one here is that we can view this here as wave 1 here and wave 2 here, and then wave 1 and 2, and continue to build over here. So we are approaching the 6,000, so there's half a silly chance that we'll be able to get this as support. It will just take a bit of wrangling and wrangling to get that into play there. It's going to take time, but what's today? Tuesday. So Wednesday and Thursdays are swing days, so that's probably what we're going to see across here. So be mindful of that. But if things go according to plan, we should be able to buy long on the Thursday afternoon, and then Friday morning, Friday afternoon, Monday morning, and yeah, that should be enough at that point to get us going. So that's the timing of it is on those days with the bullish weekly cycle. And in terms of the technicals here, we want that 6,000 as the support. That's what we're looking for. To get support is going to be a process, and you need to be patient for that, and don't overtrade, because we just want the setup over here so we can continue to the upside. And if it fails from here, well, we had a shot at it and we haven't risked too much. Okay, so that's the main point here. Small loss is a good loss. Yeah. So yeah, that's all it really. I'll leave it at that. Thanks for tuning in. Cheers.